Hi everyone. In this concept, we are going to talk about accounting types. The earlier episode, we have seen the basics of accounting and then different type of accounts and flow of accounts. The recap of previous episode, we have seen the definitions, accounting definitions, flow of accounts, and accounting cycle. In this episode, we will see in detail and we will also understand different type of accounts and the rules and examples. So let's re-see the definition. Accounting is the art of recording, classifying, summarizing, and interpreting, communicating of financial transactions. If there is no financial transaction, there is no accounting. So the accounting is art of recording, classifying, summarizing, interpreting, and communicating of financial transactions. Let us understand the relationship of accounting and bookkeeping. The first one is accounting, the second one is bookkeeping. Please remember the accountancy consists of accounting and bookkeeping. Somebody says accounting means it is consist of accounting and bookkeeping. Also, please remember bookkeeping must end before accounting starts. Bookkeeping must end before accounting starts. Let us understand the procedural aspects of accounting. The accounting gives or generating financial information, and also gives the procedure of accounting. How do we use the financial informations? How do we recording, classifying, and summarizing the transactions? How do we interpret, analyzing the information, and how do we communicate? So the procedural aspects of accounting consist of generating financial information. How do we account it? What is the uses? How do we record, classify, summarizing, analyzing, interpreting, all these things. So all these points consist of procedural aspects of accounting. We all know accounting procedures. It has got a two portion. One is generating financial information. Second one is using the financial information. When I say generating financial information, it starts from recording, classifying, and summarizing. When I say using the financial information, it will have analyzing, interpreting, and communicating. When I saw the definition, there are six component of definition. One is recording, classifying, and summarizing, which is come under generating financial information. Analyzing, interpreting, and communicating, which comes under usage of financial information. Let us see objective of accounting. The objective of accounting is to ascertain the results of the financial transactions. So trading and profit and loss accounts and all that. And we also ascertain the financial position of our organizations. Preferably the balance sheet gives that. And it also gives information to generate financial reports. And we also know the solvency, liquidity, profitability of the company. And you know, starts from systematic recording of transaction. We call it as bookkeeping. So the objective of accounting is systematic transactions, recording of transactions, and ascertainment of results, know the financial health of the organizations, providing information to stakeholders to know the positions like solvency, liquidity, profitability, etc. Let us see the functions of accounting. The first function is measurement. Second one is forecasting or predicting. Third one is we can make decisions. Fifth one is comparison and evaluation with other companies. The next is we will have a better control about the organizations. And the accounting also helps the government to formulate regulations. And finally, it helps us to pay tax, and government also can access the tax payable by the organizations. So every businesses must have a good accountant to grow organically and multifold. Let us understand the subfield of accounting. One is financial accounting, second one is management accounting, third one is cost accounting, fourth one is social accountability or social responsibility of accounting, fifth one is human resource accounting. These are all the subfield of accounting. We all know financial management and cost accounting. The social responsibility accounting and human resource accounting is something unique in nature. Who can use this accounting information? Number one, investor. Number two, employees. Number three, lenders. Number four, suppliers. Number five, customers. Number six, government. These are all the people who uses financial information or accounting information. Finally, the general public, we will use the accounting information of the organization, know about the company, financial position of the company, etc. So Warren Buffett say accounting is a language of businesses, right? If that is the case, everyone should know what is accounting. Somebody is doing a business, he should know what is meant by accounting. Somebody is working in an organization at a managerial level, he should have a basic understanding of accounting, right? In this endeavor, we will see what are all the type of accounts we have. One is personal account, second one is nominal account, third one is real account. So we have a three type of accounts. One is personal, nominal, real. So what is meant by personal account? Personal account are those account that are related with individual companies, firms, group of association or group of companies, etc. These person could include either natural person or artificial person or representative person. So when I say personal account, it is individual, companies, firms and group of associations. The rule for personal account is debit the receiver, credit the giver. This is a golden rule of personal account. One should remember this. This means the person giving the goods or services to be credited and receiving the same is to be debited in the book of company. The rule of a personal account is debit the receiver, credit the giver. The examples of personal accounts are customers, vendors, salary accounts, employees, drawing, and capital account of owners. All are examples of personal accounts. Let us see nominal account. Nominal accounts are account related to and associated with the income, expenses, losses, and gains. So nominal accounts related to income and expenditure. The golden rule for nominal account is debit all expenses and losses, credit all income and gains. I will repeat, golden rule of nominal accounts is debit all expenses and losses, credit all income and gains. The examples of nominal account is purchase, salary, wages, commission, dividend received, dividend paid, sales account, etc. etc. So the moment when I say nominal account, all expenses and losses, income and gains. The rule for nominal account is debit all expenses and losses, credit all income and gains. Real account. Real account are those that are related with property, assets, possessions, etc. The golden rule for real account is debit what comes in and credit what goes out. I'll repeat, the golden rule for real account is debit what comes in and credit what goes out. The examples of real account: land, building, property, machinery, computer, software, furniture, etc. Okay, so these are all the three accounts critical for organization to understand. One is personal, nominal, real account. Personal account golden rule is debit the receiver, credit the giver. Nominal account debit all expenses and losses, credit all income and gains. Real account golden rule is debit what comes in is credit what goes out. Okay, I hope everyone understood the different type of accounts. the definition of accounts, and the golden rules of each accounts. I hope this will be helpful to you, and keep watching. Probably on the next video, we will be talking about few accounting terms and journal entry. Thank you so much, and please call us back at this number given here for any support or any information in this regard. Thank you so much.